Well, let's stay in this space, but if you do a search on LinkedIn for angel investors in Australia, you would find the ratio of 9 to 1 when it comes to male to female investors on page after page. A 2020 report from Women in VC revealed that just shy of 5% of venture capital in the US, partners in the US, are female. Got a long way to go, haven't we? So for a conversation about these numbers and how they affect founders and what steps are being taken to close the gap, we're joined once again by the CEO of Aussie Angel, Cheryl Mack, who's just done a fantastic piece that is now up on startupdaily.net about this very issue. Cheryl, great to have you back in.
Thank you so much. Great to be here.
Well, of course, you've been a passionate backer of female founders and women in tech more broadly. Part of that was your inspiration for Aussie Angels, as well as sort of getting smaller investors involved in this space to help startups as they're starting out. Just take us through your central thesis, because what you've argued is that Australia's current investment rules when it comes to sophisticated, high net worth investors are hurting female founders.
So it starts with what I'm seeing in the market, which I'm kind of calling the cycle of funding, which is that we've traditionally seen founders being overwhelmingly male, right? And when you go to do your first round of funding, who do you go to first? You go to do your friends and family round. For men, typically they have more male friends than female friends.
The mates and family round.
Yeah, right? So and that makes sense, right? I have more women friends than I have men friends. But when they go out to their friends and they raise, they tend to be male. And then when they go to do the next round, for example, when they go to get VC funding, because they've had a little bit of early validation and they already have support, they tend to be more likely to get funding from VCs. And then because there is also a higher chance of getting funded because you have a warm introduction, they also get a higher chance of getting funded. And then there are also more men in the room, typically around the IC, the investment committee table. Mm-hmm. And then, of course, when that company continues to grow, they're more likely to succeed because they're VC backed and they have all this support. And then when they exit and they make it big and everyone makes money, including the early angels, all of those people tend to be more on the male side. And so, of course, what are they going to do when they've had that exit? They'll reinvest it into the ecosystem, either as starting their own company again or as angel investors. And so it perpetuates that cycle because then the next generation of founders tend to be more male. So we need to break that cycle.
Mm-hmm. Well, you've just sort of basically taken the point I was going to ask you, because your argument is we need to break the cycle, and you've got 4 ways that we need to do it.
Yes, absolutely. So I think the main players in this ecosystem that can make the biggest difference are founders themselves and VCs and angels, the ones who are writing the checks. From the founder's perspective, I think it's important to think about diversity on your cap table from day one. So when you're going out to do that first round, making a point of thinking very purposefully about who you want to bring onto your very first cap table, and not just making it your close mates. And so recently I've had a couple of founders who have reached out to me specifically to say, who can we bring onto our cap table? And that's really good. I'd love to see more of that. The next step is around having more female investors who are writing checks. And one of the things that I've seen that does hurt women investors, particularly female angel investors who want to get into this space, is the sophisticated investor rules. So that is either the income or assets test. The assets test, well, actually, I'll start by saying women in general, we still have a pay gap in Australia. So that is one of the things that is hurting us, because how are we supposed to meet the income or assets test if we aren't making as much as men? And that's still, I want to be clear, we're moving towards the right direction, but we're still not there. The other issue is that the age at which professionals tend to naturally reach the income that would be required to meet that income test is also the age at which women tend to have children. So we do take some time off, and of course, if you don't meet that income for the last 2 years and you've taken some time off sometime in those 2 years, then you're not likely to meet the test.
And the other part is at that very point in time, there's considerable capital reallocation when it comes to raising a family that also creates a new challenge.
Correct, as well. And so, there's another stat that women retire with 20 to 30% less super than men. And these are issues that we need to address. While at the same time, women make fantastic investors. I think there is a perception in market that women are more risk averse, and that is absolutely not the case. And we need more women around the investment committee table.
Well, you allude to that with some people like Lauren at StartMate and Alicia and Jackie at Airtree. Going back to what you were saying before, when founders are thinking about who they want around the cap table, should they be walking into these VCs and sort of saying, "Oi, where are the women?" Serious question.
Look, yes, I would love that.
Call
but
it.
At the same time, I'm not going to say, go and be mean to a VC because, of course, they want their money.
I'm not saying being mean. I'm just sort of saying, point out the obvious here, address the elephant in the room.
Yes, it definitely starts with the people who are going into that room and saying, look, the ratio is not right here. And I would also like to say it's not just about women and gender diversity. We need diversity across the board. So underrepresented, diverse ethnic groups as well. It's really important. But yeah, I would love to see founders walk in and say, look, the ratio here isn't right. And I'd love to see a change in that.
Well, we talk about ESG and meeting those criteria as we sort of go into investing. So to me, it just makes a perfect sense on that front as well.
Yeah, absolutely. And I do think funds are moving in the right direction, but we would be well served to see this accelerated.
All right, now let's turn our attention to Aussie Angels. What's been happening in that space?
Yeah, we are moving quickly. We're able to support 15 public syndicates at the moment that are live in the directory. So if you are an angel investor and you're interested in getting deal flow from experienced leading investors and getting access to what they're investing in, then you can come to Aussie Angels and join one of those syndicates. We're also supporting 6 private syndicates who are running their own syndicate outside of the public space. And we've launched a number of deals. Most recently, I've launched a deal called Pushes, which is
the sneakers.
Yeah, the sneakers. Yeah, exactly. So I have been able to. I was an early investor, so I was able to use that to get an allocation for my own angel syndicate, and that one's.
I had no idea you were such a big Kicks fan.
I wasn't until I met Sandy and Justin, and I was just like, I fell in love with their energy. So yeah, that's one that I've done with my own angel syndicate, and we have a couple others that are live with some of the other syndicates as well.
And Hex is one of them too?
Hex we closed a couple months ago with Jeanette, the founder. She's a rock star. Start with Hex. They're an ed tech company, which I'm excited about getting more into ed tech because I do think that we need to close the gap in terms of tech talent, and we're just simply not going to produce enough through universities, so we need to figure something else out.
Before we wrap, I'm going to put the same question to you that I am asking a lot of people right now. What's your crystal ball say about the next 18 months to 2 years? Is it going to be tough? Is it going to be tight? Are people already starting to rethink investment?
Look, there are some questions coming into the conversations that I'm having with investors, but I haven't seen a downturn in the amount or number of investments that are coming through in the syndicates that I'm seeing through Aussie Angels. Whenever we do have those questions, I think about, we've been through enough of these over the years in history to know that there is a cycle here. And if you were writing checks between 2008 and 2012, you were part of one of the largest wealth creations in history. And if we actually are going into another economic downturn and you are able to write checks during this time, I suspect you will be part of another similar wealth creation. And I am so excited that we are at Aussie Angels is being able to facilitate that, and we will be at the inception of that here for the next time, if that's what we're going.